Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Following the US Federal Reserve rate decision, the renewed momentum for the Australian dollar on Thursday continued from the inverted hammer. And from there, the market is now recaptured the recent highs of around 73 cents. Technically, though, the RSI may be looking as a positive pattern, but the MACD still is lagging behind. I do anticipate that renewed tests up towards a level around 73.40 should fail, although the pattern is somewhat increasing to a further recovery. Let's see how the market plays into the European session. And if we do see a rejection from that top side, all eyes turn back to the recent challenge lows, which is around 72.2025. Also, the euro took a rebound from that 116.75 level, with the US dollar pulling back slightly but still holding above 93. It is assessed that any renewed upside attempts should find resistance around 117.55 to 118.15 and could give opportunities for fresh renewed positions to the short side. If we do see a rejection from here, then we should see another retake on the challenge of 116.75 and reassess from there, because the technical signals are still somewhat weak, and therefore I feel this bullish candle would eventually be returned back to a bearish candle, that is. The pattern seems a little bit all too familiar when it comes to dollar yen as we return back towards that 110 handle, with the supply zone expected to see a return in that of bearish sentiment. Could see a rejection from that 110.45 to 110.80 handle and look back towards the bottom side of the range, seen around 109.75 to 109.25. The pound found a little bit of momentum after the Bank of England, as widely expected, kept its interest rates on hold. Still, the somewhat hawkish statement did give the bulls another return event to the upside, now challenging around 137.55. From the given technical aspect, I do feel the market will struggle anywhere beyond 137.55 and eventually see a return back towards that bottom side around 136.70 to the lows around 136.20 and reassess from there. That would mean the whipsaw price action and rebounding off that low in sterling yen around that 148.90 to 149.15 is now going to come into resistance around 151.80 and eventually see a market take a downturn back to the bottom side of the range. The bears come back heavily for gold and now reached its objective to the downside of 1,748, but still left open 1,726 to 28 as a potential challenge due to the weak technicals. However, there is a bit of bullish divergence coming into play here, so do be on your guard that we may see a short squeeze up towards 1,762 to 72 before the down challenge. But overall, from a broader aspect, I do feel 1,726 is still on the cards. Wrapping up with oil, the market is heading now further after clearing that topside resistance around 72.80-85 and looking back to the July highs, which is seen somewhere around $76 a barrel due to the market pattern. But there is a little bit of bearish divergence here, so we could see any renewed sharp challenges reflect like previously and reject that top side. So no doubt the bears are preparing for the ambush. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new weekend.